Everybody, welcome back to Mac Tax. Purpose of this video, I'm going to be making a little bit longer form content. I got a whiteboard here behind me to help illustrate if you're watching on video. The point of this video is to discuss the taxation of sole proprietors and single member LLCs. This is meant for people who are just starting out and have their own business, to explain to you guys how the income tax system works for you, what to document to be ready for year end to file your income taxes, whether you're doing it yourself or using a professional like us. The reason why I'm making this is so many times at the end of the year, someone who starts a business is ready to do their taxes. Now they say, I don't have any of my income and expenses documented. And they feel when they go to somebody to prepare their taxes, they think that they're going to do all of this for them. And then usually if an accountant is handling the books and they say, okay, it's going to be $1,000 per month to go through all of your bank statements and prepare a profit and loss before we even get to doing the taxes, and they hear a price of say $13,000 or $15,000, they say, oh my God, this is crazy, when they thought the price was maybe around $1,200 to prepare their taxes. So this video is meant to save you money and also understand how taxes work and what you should be doing throughout the year. So let's start. And the second point of this video is also, hopefully when you get to the point where you're ready to use a professional, you can use us to help prepare your income taxes and hopefully use us to keep your books in order in QuickBooks one day. But when you're starting out, money's tight. And the biggest expense we all face is income taxes. Let's start with defining what is a sole proprietor and what is a single member LLC. And we're talking from the perspective of the IRS, the federal government. They view sole proprietor and single member LLCs exactly the same. Sole proprietor is when you just start doing business. Say I do a job for somebody and they pay me $1,000 to mow their lawn for the whole year. That's a sole proprietor. I show up with my own tools and equipment. I mow the lawn. It's just me. I get paid $1,000. I report that $1,000 of my income taxes. Single member LLC. In the eyes of the government, it's the exact same thing. If you form an LLC and you're the sole owner, you are considered a single member LLC, and it's reported the same way on your income tax return. So this goes on your form 1040. Same form you'd fill out if you had a normal job, but you include Schedule C. Schedule C is basically a P&L statement. This is where you document all of your income and all of your expenses. Now the next question, what expenses do I write off? What is income? How do I track it throughout the year? The federal government knows that single member LLCs and sole proprietors are some of the more newer businesses starting out. So you don't necessarily need to report on your income taxes a full accounting, including your balance sheet of cash put into the business, liabilities that you have, accounts receivable. It's just a profit and loss statement. So you have on top income, or sales as some may know it, less expenses. And then at the bottom, you have your net income. Keep in mind, I'm not an artist or an English major. I'm an accountant here, so bear with these bad handwriting. So income, going back to the lawn mowing business example. I mow a bunch of lawns throughout the year. Say I make $100,000. Now throughout the year, you hire people. You might pay someone as an employee or an independent contractor. If they're an employee, you got to issue them a W-2. If they're a contractor, you have to issue them a 1099. What's the difference? W-2 are employees. Usually, you control when they work. You dictate how many hours they're going to work. They use the company's tools. They're covered under your insurance. 1099 is when you sub it out, basically. You may need somebody just for a weekend. They have their own company. They have their own tools, or they're their own person with their own tools, their own insurance, their own line of work, but you need them as a specialty because you're cutting this tree and you need to sculpt it in a certain way. You don't know how to do that, but you got the job, you got the client relationship, they're paying you. So you're going to pay them, say, $1,000 for the job. 1099, anyone who you pay over $600, you got to issue them a 1099 for all the money you paid them throughout the year. W-2, you need to set up a formal payroll service. You need to get with somebody like ADP, issue them a W-2. There's payroll tax returns involved. It's a whole other animal. You don't want to do that wrong. It's a quarterly filing that's outside of what we're talking about today. But you need to know if you're going to start paying people, you have to decide whether you're paying them as a W-2 or an independent contractor. If it's an independent contractor, you don't have to withhold taxes like a W-2 and have a formal payroll set up. You need to get what's form W-9 from them. All that is their name, their tax ID number, and their address. At the end of the year, you issue them a 1099 for the total amount you paid them throughout the year. And get that W-9 before they start doing any work for you, because if you pay them 10 grand and then you ask later on for the W-9, you may not always get it. But it's important for you to issue the 1099 as the business owner because you're responsible. What other expenses? The income's easy. That's what we got paid throughout the year. Expenses are anything ordinary and reasonable to conduct your business throughout the year. What does that not include in terms of expenses? Personal expenses. If it's something that's, your clothes that you can wear every day for personal use, or your groceries, those are not business expenses. There are some mixed use expenses like your cell phone. You can write off a portion of your cell phone as it relates to the business. You can write off a portion of the vehicle that you use. You can't deduct your commute to and from your office because that's considered your tax home. But if you travel to a client, that's a deductible travel miles. Software on your computer that you need to do your job. Professionals that you pay, accountants, lawyers, all deduction. Any advertising and marketing. The Schedule C has pre-populated lines that even show you certain categories to document your expenses. Now, let's say in this example, we have $75,000 of expenses. That leaves us at the end of the year with a $25,000 profit. How does this get taxed for income tax purposes? Well, this is subject to both income tax and self-employment taxes. Income taxes, let's say you're married, right? If you're married, the standard deduction for the year 2024 is $29,000. So you're not going to be paying any income taxes on this because it's below the standard deduction, but you do owe self-employment taxes. Now, there's a very specific number to calculate. It's 92% of your earnings. You get to deduct 1/2, but basically the bottom line is the standard deduction, your child tax credits, they don't apply to self-employment taxes. What that is that's the Social Security and Medicare taxes that come out in your W-2 job. You're now the employer and the employee, so you have to pay both sides of that Social Security and Medicare. You're an employee, the employer pays half if you're, and the employer pays the other half. But you're on the hook for all that. So what does that mean for you? That means you need to set aside 15%. That's what you need to know to put aside for the end of the year on that $25K because you're going to owe it. And you actually don't even get to wait all year. You have to actually pay it in quarterly estimates by the time you make it. Let's say you made that all at the end of the year, you need to pay that by Q4. That's January 15th. So, that's where a lot of new business owners get caught off guard, where they may not owe income taxes, but they still owe that self-employment taxes where they go to file. Because unless you had any refundable credits or money paid in throughout the year, estimated tax payments, or maybe you had a W-2 job where you had some withholding paid in, you're going to owe that 15% on that 25K, and that can catch a lot of people by surprise. So you got to make sure you're keeping an eye on this throughout the year. Which brings me to my next point. You need to document your income and your expenses throughout the year. What I recommend to people is have a separate business bank account. If you don't have a separate business bank account set up, if you have a problem getting your EIN and your tax ID and your LLC documents set up, at least open a separate bank account where you can track everything. Then you can go throughout the year, and this is how to get your books in order, whether you're working with an accountant or you just want to know at the end of the year, or at the end of the month or at the end of the quarter where you stand. So in your bank statement, you'll have certain line items. You can have income coming in, $100. You may have a deposit of your own money because you need it to make payroll of $1,000. You may have expenses going out, $500, $600. You can use a software like QuickBooks, or you can even just do something as printing it out or putting it in Excel, which is what I recommend in the format we like, and just put a category next to it. $100, this was a sale. $1,000 that you put in yourself, it's not income. This is what you call a capital contribution. As a sole proprietor, single member LLC, you don't pay yourself payroll. You get taxed on that 25K net income. So you don't issue yourself a W-2. When you put money in, it's capital into the business, non-taxable event. When you take money out, it's a distribution. And you get taxed on your net profit throughout the year. So you can take money in and out, transfer it in and out as you please. What matters is that net income, that net profit. Expenses, let's say this was supplies. Keep a consistent category, $600. Say this was legal fees. And then throughout the year, you can take note of where you're at. You can run a simple formula in Excel, look at all your sales, all your expenses, and then see what your profit is year to date. Talk to your accountant. Do you have to make an estimated income tax payment? Because you don't want to wait all year and get caught off guard, because then you get hit with interest and penalties from the IRS. They don't want to wait all year to get their money. They want their money every quarter from self-employed individuals. So it's very important that you're on top of this. You don't want to wait all year. And most importantly, when it's tax season and your return is due in 1 month and you're trying to get the information to your accountant, you're going to be doing all this work for 12 months in a matter of 3 nights. And it's going to be a lot of work for you to do. And you may not remember why you spent certain money in certain places because that bank memo doesn't have all the details. So I recommend staying on top of this at least I recommend a monthly basis, but at least a quarterly basis to stay on top of this. And taxes is 30% sometimes of what we pay. So wouldn't you want to know, how much you got to pay? And also then you can start to strategize. As your business grows, you can maybe elect to be an S corp. It all depends. But this is the hardest thing I see in new business owners is just documenting your income and your expenses. And a lot of times it costs a lot of money to pay somebody to do this. So in those very early stages, you may not like doing this, but this is absolutely essential in order to, 1, not get audited, and 2, take full advantage of all of those expenses that you are entitled to at the end of the year. It's very easy to add up all the income, but then getting all those expenses and putting them on the right line and knowing if they're deductible or not, that's where it gets tricky. So hope this video was helpful to you guys. We're going to start putting out hopefully more of this long form content, and we'll see you in the next one.